Uh, well, hello everybody. Let's start. Good morning to everybody of you. It's very tough times we are having. In spite of that, we have to go on doing what we do. And I find that some of you are quite, I don't know how many students are there. Okay, so you can also speak if as and when required. Yeah, would you like to tell me anything, Ravi, Mr. Ravi? Okay, so yes, I'm ears for you. Okay, so welcome you all to this maybe a series of sessions. I am CMA Dr. Joydip Dasgupta, and some of my videos are also available at the website. And first of all, I congratulate you for choosing this course, in the sense that given the fact everybody is are pursuing engineering, or you are already engineers. Am I right? You can also message me or unmute yourself and talk. Since this shall be a very small group,
Yes.
you are. This is an engineering course. Okay, fine. So most of you have already completed your course, and some of you are already into your jobs. So how many of you are already into your jobs? Oh my God, I understood, Ravi, Mr. Ravi, that you are well into your jobs. Thank you for choosing. So, Mr. Ravi, why after so much of experience into the workforce, why have you decided to 4 years of experience? Why have you, Mr. Ravi? Why have you decided to go for this course?
Yeah, I mean, my experience is primarily into engineering design.
Okay.
So I started as a design engineer, structural background. So
Okay.
over the last 20 years, I worked as a lead and head of civil engineering, that kind of role. But as I transitioned to project engineering management 4 years ago, I was looking after complete portfolio of engineering disciplines.
Okay.
So then I was looking at costing to some extent, procurement and all that.
Okay.
So while I do that, I was thinking probably I can do a MBA, something to help my career progression. But I came across this from Institute of Engineers, which I thought is relevant and more applicable in terms of the curriculum.
Okay.
So to improve my knowledge in that domain, I thought I'll pursue this.
Absolutely. It's a wonderful thing you have done. Well, actually, what has happened is these courses were started in 2019, and I was there with the senior director throughout the course in designing some of it, but it was a very hurried course. And one of the issues is that it's not getting that much of response, but this is a beautiful course, And how many of you are from the commerce background? How many of you have had previous experience into the commerce fraternity? Okay, none of you. Now, I have, first of all, after some few minutes of this interaction, I will off my video, because in the sense that I can start using my pen tab. So my USB doesn't support both of them. So I would be signing off my video, and I would be joining with the pen tab, which would be more useful for you people. So point is that I have a classroom for you. So I have a classroom for you, so you can join the classroom. Of course, it's an optional issue, but immediately after the class, I will share the document with you through this classroom. Okay, so this would benefit you in the sense of having the document right after the class is over. So let me start. So I'll off my video, and I will start my presentation. So please allow me to now. How many of you have already appeared for the examination once or twice? Have you appeared for the examination? For anybody of you who have appeared for the examination once or twice? Twice, actually, 2 times the exam has started. So naturally, any of you have appeared for the examination? None of you. None of you. Okay, fine. Anybody? Okay, not yet. Fine. Okay, so now we have 5 modules. Is this screen presentable? So can you see the screen?
Yes, sir. Yes.
Okay, fine. Now you have 5 modules. I am going to, maybe, I don't know, I'm going to schedule on, I'm going to focus on module 1 and module 5, unless until this tell me more about it. And 2 things I must clarify. I do have a Google Classroom. So I have a Google Classroom, and I have a Google Classroom, and you can download the Google app and you can join this way, or I will copy this for you and give it in the text box so you can directly click and join there as well. So it will happen is that you can easily access all the documents that we are going to share right after the class is over, or while the class is over, we are doing the classes. You can so the link is there. I will be taking some MCQ questions, so that would be helpful for you. And I was going through the material. It's not very well written. Sorry to say that. I'll not say written. I will say organized. I think that is better to say. It is not pretty well organized. I'm talking about module 1, part A. So today I'm going to talk on module 1, part A. Module 1, part A. So I have for you a 26-page document, so a huge document. I understand that it is easy to talk for 2 hours, but it is very difficult to listen to a person for 2 hours, just like that, especially when you are from a different arena, and many of the things are really new to you. So please, I'm going to give you a 5 minutes, 10 minutes break between my classes, between the 2 sessions, and please feel to interrupt. We are in no hurry, so this is a 1 session. Even if you can do some amount of work, that would be helpful for us. So this is a syllabus we have in hand, and I was just thinking over the matter, and you will find that these are basically a jumble of things. I think 1.1, 2, and 5 maybe a unit together, and 3 and 4 is a unit together. So 3 and 4 is a unit together, and 6, 7, 8 is a unit together. I will tell you why. Just 6, 7, 8, and 9. 9 is also, I don't know why 9 has been included. Still, I'm not going to question the syllabus. So that is there. So we just going to separation of semi-variable cost. I think this can be done with this. So 1, 2, and 3, 5, and 10. So 10 is also important for 11, but these issues, I think we could do them together. So 1, 2, 3. I'll just 1, 2, 5, and 10. I think this can be. This is what we are going to talk today. 1, 2, 3, 1 to 5. At least that is what I have proposed. 3 and 4 is coming together, and marginal is a different. I was going through the 2 question papers we had. Much of the questions are 2 marks. So you have 15 questions of 2 marks each, and 20 questions of 1 mark each. So this is the pattern. This is the 50 marks you're going to cover, and I think this is the most important. This one and the 5th module. These are the 2 most important issues of this syllabus. That is my perspective, maybe because I'm from this arena as well. And in the syllabus, this is included. So the budget is included in the syllabus. But it is absent in the study note. So basically, you have to depend on my material, which I'm going to give you on budget, if I go on continuing with the classes. I don't know much, because they ask us to take the classes, and we deliver. So this is how the situation is. So budget is included. If you look into the syllabus, you will find budget is included. Budget is included. But budget is not given in the study note. So you have a note. I have a hard copy of the note as well as a soft copy of the note. So then and now I will be referring to those study notes because you have them. So I think it would be good for you. But I always tell that these classes of mine are 50-50 classes. These are basically 50-50 classes, 50-50 classes, in the sense that I talk for the 50% of the situation, but I talk on the materials which I made. These materials are made by me. Refer to the second point, my disclaimer: nothing is mine, only the perspectives are mine. So the material which I prepare from various books, from various, even your web material which you have, these are very much going to help you with the situation about my talk. So this is a situation. You have 5 modules. All the modules of 50 marks are designed like this: 20 questions of 1 marks and 15 questions of 2 marks. And generally, I cannot tell about the paper setters, but generally 2 marks are a little bit, you have to do a little bit of sums. And this is a module I have prepared today. You will find elements of 1, 2, 5, and 10 in this unit. In this 26-page document. I will PDF this document, and I will immediately after the class is over upload that in the classroom. So you can just join the classroom and have this document immediately. And so you just have to be with me during the class. And you are most welcome to interrupt me as and when required. Just tell me, because this understanding is very important. You are from new arena, different arena, and naturally I am from, I have been doing this job, right? I'm basically a teacher of a small-time college. And I used to teach in the Calcutta University as well. I am with Shishi Kratan. I was with WIC-FI. I do sessions in with Calcutta Stock Exchange, Calcutta University, Calcutta Stock Exchange. So my work, I'm absolutely from the classroom. That is one of my advantages as well as a big disadvantage. So I have introduction to this subject, to this what we have, what we are doing, and after that we move over to the. So if you look at the so introduction, what is cost accounting? So I'll just you can just read through and you understand the situation. So I'll just go on making my points clear. So basically, you look cost accounting from 2 aspects. Number 1 is your fixation of sell price. So basically, you try to fix your sell price, and for that matter, I usually take, even if you look the video of, I usually take a cup of tea which I had in the morning at a shop. It's priced at ₹5. In Calcutta, it is priced at ₹5, and so this is how the shopkeeper priced that at ₹5. So he must have gone. So it actually, you either go through a cost approach and a demand approach. If he might also feel that what is at what price others are selling, so I have to sell at that price, and therefore that's called a top-down approach. We never recommend that. We really recommend the cost approach. You just add up your cost. So, and you add profit. So you add up your cost and you add profit to that, you get your share price. So as simple as that. It's a very important perspective. So if you look at the cup of tea kind of a thing, you just add the expenses, the amount he has paid in sugar, tea leaf, water, and milk. And he's also done some labor charges. If he himself put his labor, in spite of that, there is some labor charges, and that is called imputed. I'll come to this imputed cost. What is this imputed cost? It is not out of pocket cost. You don't pay for it, but it is included. Now, if anybody of you are doing your business, you can understand that as a businessman, you are organizing things. So basically, you are entitled to profit. But as a businessman, you have also put in some amount of your money, which you could have also put in the fixed deposit. And if you had put in a fixed deposit, you have earned some money. So basically, there is also interest on capital, which is imputed, which is included. I'm talking about a very small firm. I'm talking about a very small firm. So these are imputed. This is included. You don't have to pay for this. And there are some other expenses. For example, the fan which is going around in the head, and the rent of the thing. So there are some other expenses. And there is also the cost of the paper cup, which I have assumed at 25 paisa. So this is the cost of the tea he has produced for one cup of tea he has produced. So, and this is our sell price. He has fixed because he wants to keep 50 paisa profit. The unit is the cost unit, which we are going to come up later in our class. We'll define that, but be careful with what is cost unit. Okay, because your exams are a little different from the usual. Yeah, please tell me. I'm here for you.
Yeah, so
tell me.
The cost of the paper cup, does it come under a raw material cost, or like why is it getting added in the last?
Okay, no, it is just because I forgot to add it in the upstairs. Yes, it should have been included here, right? It is a direct charge. It is traceable. It is a direct charge. Cost of the cup, absolutely. Thank you. That tells me that you are really listening to what I'm saying. Absolutely. Thank you for your interruption. It is a direct charge. I just forgot, and that is why I put it downstairs. Okay, fine. Absolutely, it is direct, because if you want to have a cup of tea, that paper cup is incidental. It is traceable. You have to pay for it, because the fan. Well, fine. There can be a shop which doesn't have a fan, so that can be done away with, and these are called overheads. So expenses which we can dispense, which is not must, which is not related to the product, are called overheads. So they go over the head of the product. So you have your material, you are right, and you have your labor. One thing is missing out here, and that is our direct charges. So direct charges are charges which are really directly traceable to the product. You cannot have the cup of tea without the paper cup. It is incidental to the product. You are absolutely right. It is not part of the material. It is indirect material, we will rather call it. I'm coming. Don't worry, I'm coming. So material is there, labor is there, direct expenses now I have included, and you have your overheads. So this is this process of adding up. You just add up your cost. This process of adding up. This process of you are adding up. You are adding up. This process is called cost accumulation. Loosely, it is also called cost ascertainment. And you must understand that this is our unit 5 cost sheet. This is what we do in our cost sheet. So this is our unit 5 cost sheet, just adding up. You just add up. So look, I have said out of pocket cost, the expenses, the cost which goes out of your pocket, as simple as that. And there is also cost for decision making. DM is decision making. So cost for decision making. I'm not going to talk about this today. Maybe when I'm going to talk, if I'm given the opportunity to talk on marginal costing, I'll do the same. But So this is number one. If you remember that, well, I was starting my lecture, I said about number one. So this cost, and this is all fixation of sale price was my number 1 point. And in fixation of sale price, basically you talk about out of pocket cost. You talk about out of pocket cost, and there is also cost for decision making, which we will come when we will be talking on marginal costing. In paper 8 classes, in my usual cost accounting, in our usual cost accounting, I deal with the 10th cost terms, because right now after this is over, I'll be talking about various cost terms. So this is I have basically I can think okay, what about your paper? It is called costing principles and practice. So this is our term. So this is our paper. This is 50 marks. So in paper weight, we call in cost accounting, we call this cost accounting. The same thing. It doesn't matter much, but I would rather go by this term. I don't like this principles and practice. I don't know how much of practice we can really do. Maybe the last item, ABC costing, over there we might be doing practice. So I think cost accounting is 3 issues basically: A, B, and C. A is unit 1, material, labor, and overhead is unit 2 and 3, and cost accumulation is unit 5. So basically speaking, if you look from unit 2 to unit 5, it is unit A. It is A. And unit 10 is also, you have to, actually unit 10 shouldn't be otherwise dealt with. It is a part of classification of cost. Unit 10 is a part of classification of cost. So this is what I was talking about. Unit B is a lot, because this cost, these are all, so basically it is cost accumulation process, just adding up of costs, accumulation process. But as you will see that the nature of the product is different. For example, you might all tell me to take a class, or institute has told me to take a class. So I have designed these particularly for you. So this is basically customization. So I have customized this for you students. So rather I will call this job costing, because absolutely individual product for you. Batch is, I don't know why batch, the word batch is missing from the syllabus, but it is a very simple thing. When you produce in batches, for example, cycle. So cycles are produced in batches because irrespective of the demand, it is produced in batches. Contract is about building. The product is basically for 3 months, 3 years, 4 years, 10 years, bridges, etc., etc. Process is about, for example, plastic. For example, crude petroleum. You get, you process and you get petrol, kerosene, and you process, you get petrol, and you process, you get aviation fuel, diesel. Diesel comes out here, and you ultimately you get your aviation fuel. So this is actually under comes under process costing, because the product is have gone through various phases. I will say various phases of process. So like soap and wax and petroleum. So this is about process costing, and it covers basically 3 issues, simple, equivalent production, and joint product. Now, interestingly, this joint product is given in your syllabus as a separate unit. As a separate unit, it is given. Well, I have heard that overhauling is being done to the syllabus. I don't know much about it. And finally, you have operating costing or service costing, where we talk about services. So you see the same accumulation process. So the same accumulation process, just adding up of cost, adding up of cost. So you just add up your cost, and you have various types. So these are basically methods of costing. So that is why these are called methods of costing. These are called methods of costing. And in this perspective, these are some cost terms we have to define: cost center, cost unit, composite cost unit, segregation of semi-variable overhead, cost control, or cost reduction. I have a list of 9 cost terms. Actually, it is 11 by my experience, but naturally, since I have redesigned this for you students, for you people, sorry, because there are very many senior persons out here as well. So naturally, I have redesigned this talk a little bit. And finally, you have techniques of costing. You know, you got to, because cost is a term which is good if you keep it low, if it is low without compromising quality. That is why we do when we go to the market. We bargain with the shopkeepers. We try to get it as low as possible without compromising quality. And that is why if you look at your module 5, and if you look at the talk I gave, which is already there in the material in the website, I took enormous, I took huge 4 or 5 hours talk on quality, because it's a huge issue. Maybe if you are with me, maybe if they give me a chance, I will also again talk about quality. There are so many things happen in the quality juncture, you know. So maybe let us see. But marginal is a technique to take the right decision, you know, application of margin. So decision making is the perspective. So here you get into the second part of costing, where we talk on the decision making part, cost as regards to decision making. Now I'll give you an example. Now I was to give a talk at some place during this 2 hours on 23rd March from 11 o'clock to 1 o'clock. And they would have paid me 11,000 rupees. Forget about it, I'm just joking. So for these 2 hours, they would have paid me 11,000 rupees. Now, when Apurva or from the institute, they asked to whether I would be taking this course or not for 2 hours, and they would offer me maybe 600 rupees. What do you think? Should I take this job of 600 rupees? What do you think? Simple. Once more. I have an assignment on 23rd of May from 11 o'clock to 1 o'clock, where they are going to give me 10,000 rupees for the talk. Your institution gave me the same slot and asked me whether I'm going to do the talk for 600 rupees per hour to 1,200 rupees. Should I accept the talk? Should I tell you? Should I give my talk in the institute? Yes? Anybody? No, as simple as that. You are most welcome to unmute yourself and talk as well. So, you know, no, because what is the cost of this class to me? There is a cost. It is not out of pocket. It is not going out of my pocket. 10,000 rupees is the cost of my class, and the benefit is 1,200 rupees. So I am getting 1,200 rupees from the institute, but the cost of this class to me is 10,000 rupees. So this cost is not an out-of-pocket cost. This is not an out-of-pocket cost. Not out of pocket. It doesn't go out of my pocket. But if I speak in this classroom for 2 hours, I am foregoing the opportunity of 10,000 rupees at some other place. And that is application, that is an opportunity cost. We are going to talk again and again. I have seen your question papers as well, 2 question papers as well. But today I have a supplementary document which I'm going to give you. It's 2019. What are the questions that came based on the talk I'm going to give today in 2019. So that is I prepared scanned question 2019, and that is there. So this is the introduction part, basically speaking. What is cost? What are the units? How they are designed? What I think the course covers. And of course, this is also important. I didn't talk about this. Budget is, again, as I've said, budget is in your syllabus, but it is not given in the study note. So you have to depend on the material I prepare for you. And standard costing and variant costing, I have seen questions coming now and then. But point is that be with me, and I can assure you that I will not tell anything extra. I will always keep my eyes on the question papers which have come, because I have seen that, for example, in a usual class of costing, I would have spent so much of time on job costing, so much on time on batch costing, contract costing, process costing, how you do it, etc., 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 etc. So actually, these 5 issues requires at least 10 classes. This is actually a 6-month course so naturally huge amount of could have been so when I take paper 8, I talk about these issues again and again, but I will redesign the whole issue for you people, and I will keep my left eye on the question papers which have come in 2019 and 2020, 21 January. It was 2020. So 2020. And be with me. I don't know whether they're going to, how long they're going to pull on this with me. So this is a situation. What is cost account? What we do? It is pretty clear to you. Ascertainment of cost, and naturally ascertainment of profitability. So if you just add up the cost and you subtract from sale price, you get your profitability. So you need to understand your profitability, and that is what you do. Now this area is pretty well understood. So this area is pretty well understood. But what about cost control? Now in cost control, you need to understand the other arenas of techniques, budget. So you got to understand a little bit about your marginal costing, much about budget, much about marginal costing, and these 3 are really where cost control comes in. So from introduction and methods, there is no cost control. There is no cost control in introduction and method. Whatever you can say, yes, of course, I am keeping the records, and that itself is cost control. Forget about it. But my point is that cost control comes only in the techniques. So cost control is related to the techniques. Techniques of costing. When we talk about the techniques of costing, you talk about the cost control. So this is this, and I'll tell you one thing. We have 2 gods. That is whom we always refer to. He is going to save us. One is of SEMA. This is a UK institute, and we have our own ICMAI of India, which have also issued some cost accounting standards. Now, very interestingly, I found out that your material doesn't have a chapter on cost accounting standards. It should have a chapter on cost accounting standards. Actually, what are standards? These are rules which you have to follow. Cost accounting standards are rules which you have to follow, basically speaking. So SEMA, when I'm writing SEMA official terminology, I'm saying what the Chartered Institute of Management Accountants London, Cost Institute of Management Accountants London, talks about the thing. So for example, cost accounting is, so look, I have given in inverted comma. So cost accounting is the gathering of cost information and attachment to the cost service. So this, let us not, you can easily read through this. This is given in the official terminology book. So this is actually a rule. This is a rule book, And in the rule book, it is stated, this cost accounting, the definition of cost accounting is stated like this. So this rule book is available in the internet, so you can easily refer to that. If you want any book, please message me. I can. We do have some books are available online. I can easily share those books with you. Now, one thing you need to understand, that information, since it is related. Now, our subject, the whole gamut of costing and financial accounting, which we'll be taking later, is basically about preparation of information. Now, for example, you want to go to that shop or that shop. You have two medicine shops in your locality, and you want to go to shop A or shop B. Just before going, your mother or your somebody from your house, your wife or your mother, says that, look, if you go to A, they are going to give you 18% discount, and if you go to B, they are going to give you 20% discount. Now decide. Now, this is an information. We are throughout trying to gather informations, because that helps us take decisions. So this is the criteria, the point. You need to have informations which will help you to make decisions. So basically, you need to take good decisions, I will say. And for good decisions, you need to have informations. And these informations are prepared by some subjects. Like cost accounting prepares informations which are related to cost of the product. So you have cost informations. Hopefully I'm communicating. Please, stop me and let me know if I'm not communicating, or you want me to go over some issues again. Please let me know. So the informations, what informations are produced by cost accounting? Unit cost of the product, that ₹5, the cup of tea, price of cup of tea. 4.5, sorry, 5 is the sale price. 5 is the sale price, ₹4.5. Cost price of tea cup. Unit cost. Various costs related to departments or factories as such. So, for example, you want to know a cost of the department or a cost of a factory. These are cost objects. So, where you can find costs are basically cost objects. For example, this room is a cost object. Why? Because my fan is running, my electricity consumptions are being made. So, basically, these are costs. Where costs are spent are cost objects. You want to understand about waste and technological losses. You want to understand about waste, because if you minimize waste, what you are actually doing is you are doing good. It is basically a cost reduction. So it's a basically cost control or cost reduction technique, because waste cannot be allowed to happen. Remember that waste has a cost and it will add to the products. So waste has a cost and it will add to the products. So be careful about the cost. Cost related to the number of activities. So one of the, if you go to the last topic of ABC costing, activity-based costing, you will understand that a business can be divided into very many activities. A business is divided into very many activities, and each of these activities their costs are related to these activities. And of course, but not the least, is our decision making. So this is an absolutely different arena, and these are basically about cost accumulation. And I will not just talk about this financial accounting and cost accounting, how they differ. This is a very important topic. You can read. If you don't understand, you can get back to me. objectives of cost accounting, why cost accounting, getting sale prices, valuation of closing inventory, understanding about material labor costs, and setting standards. That's a very important point. When I go to the bazaar, my wife gives me 2000 rupees for a bazaar for 5 days. Now, basically that means that I am not to exceed 2000, but I am to procure all the relevant goods and products within that 2000. So basically this is a standard, and we have a huge topic of standards, a very important arena, and hopefully we will be getting time to discuss about it in an absolutely separate environment. So these are basically going to be the basis of our operating policies. So I'm intentionally not saying about the materials which I have written, because it's a note. You can easily read the note, and I think that would be helpful for you. And remember that we want to achieve real and permanent reduction in the unit cost of the goods manufactured or services rendered. I'll give you an example. Now, this cup of tea is available at 5 rupees at a shop. Now, and the cost of production is 4.5. Now, if he can procure the goods, the tea leaf, from Esplanade through some services, through somebody, then he can reduce his cost from 4 rupees 25 paisa to 4 rupees 10 paisa, 4 rupees 25 paisa per cup to 4 rupees 10 paisa per cup. Now, what this is going to do is that this is going to increase his profit from 0.75 to 90 paisa, because his sale price is 5 rupees. So if he is able to procure at a lower price the tea leaf or the milk, whatever maybe, then he would be able to. But this has to be permanent, because it can happen that somebody is coming and he asks, "Hey, bring some tea leaf for me," and that is only temporary. But that is not going to help him. It is going to be only temporary, and then he has to readjust his cost. So that is not going to help him. And I'm intentionally erasing some of the document, because I will be uploading this for you with my notes, because that helps. Students have said that helps, but that depends on you. I'm also asking you some. Now, methods of costing. I'm not going to talk about the methods. I've also told it is only cost ascertainment. You just add up your cost. Yes? Anybody wish to share?
One question, please.
Yeah, tell me.
So there is a concept called as amortization of the cost, right? So basically we invest something to get some price benefit or price reduction, and that gets amortized over a volume. Maybe I'm talking from a production perspective. So what kind of costing does it come to?
I got your point. Well, actually, the moment you say amortization, we basically think about our profit loss account or financial accounting. In cost accounting, we generally don't do it.
Okay.
Why we don't do is that because the cost of the product. For example, if there is a machinery, now this machinery is there and this is going to contribute to our production. Absolutely. So the machinery should be added to this. Fine. It is a basic concept. But what we can do is that we can take the depreciation of the machinery and add it to the cost. But we will not amortize, we will not take a part, we will capital. The question of capitalization or taking it to revenue is totally an idea we're going to talk on in our financial accounting class. Here, just an extension of your, allow me to talk on this. In marginal costing, we do an analysis of this. What we do is that this machine is a fixed cost. And what we do is that we do not take it to the product. So we do not call this as variable cost. So we just calculate our contribution, and which is devoid of the fixed cost. We let it remain as a period cost. But what happens over there is that a machinery is taken at a particular year as a total cost. And so marginal costing is a cost control technique. But right here, I can just tell you this. Amortization, I'm not pretty sure. Depreciation, yes, we add it to cost. Depreciation of a product, we add it to the cost. And another thing is that I have a note on fixed cost and how it is taken to the product today in my lecture. I have this in my. So please bear with me. I will come up with the second part of the lecture, and you will see about what happens to fixed cost, how it gets absorbed into the product. Surely.
Thank you.
Am I able to answer your question?
Yeah.
At least for that, at least temporarily. Please be with me. I will absolutely clear the situation. Only point is that, hopefully you will pardon me for my problem, is that I am from an academic arena. So I I have been on the Dean of Students Welfare of Kolkata University for 1 year. As for otherwise, I have done nothing but teaching. So that is a big problem in the sense, one who is in the production scheduling, he understands some things better. But I try to compensate through my reading and intermingling English. So I would be learning from you people as well. So these are the 5, 6 which I have already talked about. Job costing, customized product, batch, cycles, customized product, cycles, contract, like roads. So your products are different. Only thing is that the products are different. Single output costing, one product, one small product. So this can be intermingled with the other issues as well. Process, I have said 1, 2, 3, 4 processes happens, like wax and etc. Operating costing is service costing, like hospitals, beds, etc. Multiple costing is when 2 or more methods are used. So these are what? These are methods of costing. And you have techniques of costing. Some of the method costing techniques I have already said. Marginal and standard I have said. Budget is basically a part of your management account, but still you can consider budget as an aspect because in paper 8 and very many syllabus you see budget as a part of the technique. But budget is basically a part of management accounting, which are close together. Now, uniform costing is basically industry standard. So it's basically a common method. It's common method of costing followed in the same industry or strategic sectors. Direct costing is basically charging the direct cost to the operations, and you don't have much discussions. You have discussions on this uniform costing in module 5. You have some discussions on module 5, but direct costing is basically rather while we talk direct costing, some books take this as marginal costing. So there are very many books which consider direct costing as marginal costing. So I think this should be, I have also taken this from a book, but I think you should remember that direct costing, in some books it is referred as marginal costing, but basically is a way of attributing the cost to a product. Absorption costing, let us not talk right about it, because in unit 9 we are going to talk in details between the difference between unit 3 and unit 4. So just for now, for the first day, let it like that. Don't worry, if given us a chance, I'm going to clear it out for you. Absolutely, I will clear it out for you. And finally, you have your activity-based costing. I'll tell you what it is when the time comes, but it is basically dividing your company into activities. So it's a different way of understanding the situation, a very pertinent way, and it is very much practiced in the situation. Now, I have 9 cost terms. So these are basically terms which will again and again come. Cost can be economic as well, in the sense this is for decision making purpose. As I have said, as I have given you the example, I am to get 10,000 rupees for a job which will take me from 11 o'clock to 1 o'clock in the noon. And the institute have asked me to do this class for you, to this talk for you for 2 hours, then they're going to pay me 1,200. Should I not? Now, here there's a question of economic cost. Economic cost of the decision. Economic cost of this decision is rupees 10,000, which is the opportunity cost. Now, again, you can just read this, and what I have done is that I have given you the formula from, given you the definition from referring to the para number of the CAS. It is not required for you, but if you can, if you exactly know that cost has been defined in CAS, Cost Accounting Standard 1, in para 4.5. So just for, and what, because I have to be pretty clear from where I have copied. None of these issues are mine. I'm just assimilated the whole issue from various places for your benefit. And so this is cost, and this helps us, material, labor, and expenses. The expenses are 2 types. You have your direct expenses. So it's given. Sorry. It's given. So expenses. Material can be direct material and indirect material. Example of indirect material: cotton wool. Let us take the particular example. For example, a fan in a tea shop. I have seen this. What they do is that they use a fan to get a more. It's a Indian oven, what you call in Bengali unun, and they use a fan, a table fan, to fan up the temperature. So this fan, the electricity cost of this fan is basically indirect material. So many of you haven't seen this. This is not required for a cup of tea. Not required. I will have my cup of tea just like that. So take your time. So these are indirect material. Indirect materials are materials which are not direct to the cost of production. Direct labor and direct expenses. There are also some indirect labor. For example, at this moment, what I am giving to you is direct labor. I'm just talking and talking and talking, and you are listening to me. But have we ever considered the cup of tea that my housemaid has prepared for me, which I'm sipping right now? That helps me to take this class. So this is an indirect labor. This had to be charged to the cost of the services which I'm giving you. Indirect expenses. The fan, I could have easily talked without the fan or the air condition. I could have easily gone and talked about it. But still, I do have a fan on an air condition. So expenses, indirect expenses. Economics cost. Let us keep it for another day. So I've been talking for 54 minutes. I think we just take a break of 10 minutes. I don't mind. I can go on talking for 10 hours. But this situation where you are at the back of my laptop and I go on talking, I think we should take a break of 10 minutes. Anybody of you having any other thing to say regarding the break? What do you feel? Should we take a break? Yes?
Yes, sir.
Okay, fine. So I come back at 12:05, and please click in the this classroom and join my classroom, because this material and the various things we can. So this is a classroom, and so I come back at 12:05. 10 minutes break. Let us have. And so we kept this open, and you can join my classroom because it's going to be helpful for you.
Hello, sir. Can I ask a doubt, sir? Hello.
Hello.
Sir, it's me, Akhil, sir. Can I ask a doubt?
Yeah, surely. Please, please. I'm here.
Sir, if like I'm buying a finished good bag, which type of costing do I consider, sir? Where the prices of the raw material are fluctuating.
No, my point is that if you are buying a bag, or you are buying a bag, I couldn't get your question. Would you kindly repeat this?
Sir, for example, sir, I'm like selling a bag. It consists of two materials. One is HDP and LDP. The prices of the material is like varies every month.
Okay.
So, sir, so how will like because I'm like buying this bag, the vendors give me a quotation. So I'll it's like I want to fix the rate conversion rate. So how will I will do a costing, sir?
No, the point is that I understand you. Now, first of all, let me tell you what you said so that you understand that I have understood rightly or not.
Yes,
you are
yes.
buying two products and then selling them. Just
No,
like
sir.
that, or you are making something to the product to sell them, this LDP and HDP?
We are making a bag, sir.
Okay, and for
like,
that you require two materials,
two
LDP and
materials.
HDP.
Yes, we are like supplying it to the supplying to the supplier, and he will convert it into bag.
Okay, I understand. Now the price of this LDP and HDP are fluctuating very much.
Yes, sir.
How you manage the situation? Okay.
Yes, sir.
Now the point is that this answer is not, you cannot get this from cost accounting, because in cost accounting you just add the cost and you just sell it. You just add the cost and add conversion cost to get the cost of the final product. Now the answer lies, I think, in your strategic approach to the whole issue. One thing you can do is that you can fix up a price. Now if you are new to the business, you will do some amount of market research. So you have seen the prices over the last few years. Okay. So you can at least understand that how much it does fluctuate, and you can actually fix up a price which covers the fluctuation. I think this is what you can do. If this is a situation that the seller of what you are selling exactly knows that the price shall vary. So if you want to translate that into your sell price, so you can do that. You can after 6 months you can revise your that is why the sell price increases. For example, a vegetable vendor, so he buys the vegetables and sell it to somebody, and when you go to buy the vegetables, you find that the prices are varying. So one thing he can do is that he can price those at a price which will cover the fluctuation. Okay. So if you want to keep your sell price at a particular range for maybe 2 years or 5 years, you don't want to shift that. So you can do that. I'll give you a practical example. For example, if you want to buy an egg roll, very sorry if you are a vegetarian, but if you want to buy an egg roll, you find the price to be 22 rupees, 25, 30 rupees.
Yes, sir.
But don't you see that the price of the egg is varying? It goes down in the winter, it comes up, but the price of egg rolls remains same at 30 rupees. So what they have done is that they have countered, they have really considered the fluctuation in the price of egg into the price of the egg roll. So, and thereby they know that they cannot go say you go to buy an egg roll, and they say today egg roll price is 32 rupees, today egg roll price is 33 rupees. That doesn't do that. What they do is that they keep the egg roll prices at 30 rupees, and they make a reduction or an enhancement of the price of the profit given the fact at what price they buy. So you have to basically manage your supply, and thereby the concept of supply chain management comes. You have to manage your supply. You have to put pressure on them so that not fluctuation, that much of fluctuation doesn't happen. So you have a tremendous lot of things where you can really manage your purchase of LDP and HDP so that it is not translated into your sell price.
Okay, sir.
Okay. So this is of course my way of. Yes, we'll be getting recording of miss few portions. Yes, that depends on because I am just delivering the lecture. I can see they are recording the lecture. Some of the lectures are available in the internet, but this lecture would be available with them. But you can join my classroom and you can get the material right after the class is over. And I would request all of you to do this, because I would be sometimes getting some MCQs. You can just answer them, and you can really pretty well have an idea about how the exam is going to be.
Yes, sir.
So I am on. You can ask me questions, or I will start at 12:05. Somebody asked me, Pratap, you asked me, will you be getting a recording of this lecture? And that is what answer I gave you, Pratap.
Sir, my main question is mainly to the admin here.
Okay.
Now, the notification or the intimation to this class has been given just yesterday.
Mm-hmm.
So, is it that going forward, every Sunday we are going to have classes?
Okay. You are Mr. You are coming.
I'm Satyanand.
Satyanand. Actually, since your question to the administrator, I don't know whether the admin is here or not. But what I can tell you is that if you join my classroom, the moment I come to know that I am being scheduled a class, I will immediately inform you through my classroom that I'm going to have a class at this time, at this juncture. I'll be talking about this. So that I can do in future, but I don't know how they are going to come up with the situation regarding what they have done, or that I cannot help you about. But what I can help you about is that in the immediate future, whenever I am asked to take a class, I will immediately inform to my Google Classroom if you join my classroom regarding that. So, and there is no hard and fast rule regarding joining the classroom. It is absolutely your prerogative. But as I said, number one, you will be getting the class material immediately. Number two is that some of the Google Drive questions, MCQs, which we will be taking, you can participate in that through that, and you can also get my notifications as and when I get them. So yes, any further questions?
No, that's it. Thank you, sir.
Okay, so it is 12:05, and let us once more delve into what we are doing. I said about economic cost. Let us go in the way we are going, and if it doesn't cover up, there is no hard and fast rule that I cover up all the 26 pages. So if something is left, I can easily come back the next day and talk about it. But let us keep a sequence about what we are doing. Now, I was talking about economic cost or opportunity cost. Is a very important area which will again and again haunt us It is going to haunt us in marginal costing of module 1A, group A, and in module 5 as well, where we are going to talk about relevant costing, decision making, and learning curve. So everywhere you have to talk about this opportunity cost. So you have to have a pretty good idea about what opportunity cost is and how to utilize this. Now, as I said, that costs are either out of pocket cost, that it goes out of your pocket. It goes out of your pocket. And number 2 is economic. So it is not an out of pocket cost. This is just an understanding for your decision making purpose. So I've just taken an example. It's a beautiful example. It's a classic example. A man has been offered 25 rupees for an hour's walk. So he can walk and get 25 rupees. But instead, he chooses to take a nap. So he says, no, I don't need that 25 rupees. I'll just go and take a nap for an hour. The historical cost or out-of-pocket cost, I will rather say the out-of-pocket cost. Out-of-pocket cost of this nap is zero. But there's an economic cost of this because he forgoes rupees 25 in order to take the nap. So he takes a nap for 1 hour. The historical cost is 0, but the out-of-pocket cost is 0. But there is an economic cost of the nap, which we will call opportunity cost. This is a very important criteria, but not required till we go to those cost control concept. Not required till then. So out-of-pocket cost meaning, what is the meaning of out-of-pocket cost? How you define that written, you can just read. And now, sunk cost is a cost incurred but not relevant. It is already being spent, so it is not relevant for decision making purpose. I'll give you an example. I have bought a cinema ticket for 200 rupees. It's gone. But now I am deciding, should I go to the cinema or not? Should I or should I not? Should I or should I not? How would you take this decision? Should I not? Should I go to the cinema or should I not go to the cinema? Yes, anybody? You have bought a ticket, 200 rupees. Now you are deciding whether you should go to the cinema or you should not go to the cinema. How should you take the decision? Should this cinema ticket come to your help? Is this a cost to be considered?
Yes, sir. I think that this cost has to be considered. If I don't go, then this money is gone.
No, this is already
whatever
gone.
decision I make.
Thank you. First of all, thank you for answering. Thank you for answering. First of all, this money is already gone. You have already spent the money. So even if you go and see the film, it will be gone. If you do not go to see the film, it will be gone. If you go, you will spend rupees 20 on your car and rupees 20 on the popcorn. So 40 rupees would be required and you will get some benefit. But this is gone. This is sunk. So thank you for answering. But for our purpose, this is really not relevant for the decision making. Why? Because this is already sunk. So our decision should be on the basis of what we get, the benefit of viewing the movie, and the cost that is being incurred. That is 40 rupees is the cost that is incurred. So basically speaking,
this cost of the cinema ticket is a sunk cost for us. But remember, there are two kinds of costs. One is a sunk and the other is a the total cost of for accumulation purpose, that is out of pocket cost. That everybody knows. The money which goes out of your pocket is out of pocket cost. But if the cost is already spent, then it is sunk and would be considered in module 5. Imputed cost is, for example, your mother has, yes?
Sir, I had one question. Can I ask?
Yeah, tell me.
I don't know whether how much this can relate to the sunk cost, but taking a scenario of calculating a project cost. Now, initially, if I said that I have to purchase a land of say 50 crores for this XYZ project. Now, if I have not made an investment, then that should be considered. But if I have already bought that piece of land, then whether that should be considered in that project cost or capex?
No. Whenever you are saying project cost, it is beyond this subject to define project cost. Because if you are talking about project cost, you are really talking about capital budgeting decision or capital appraisal decision, where the total cost of the project is one side, is C0, and the return you get from that is what is coming. We are talking about costs which are not related to a project, because you say project cost, fine, but that is basically an investment. You invest into a project and how much return you get from the project. So that is a totally different scenario you are talking about. But sunk cost, you will please let me go further when we talk about decision making in perspective. So sunk cost is absolutely not. Your question holds absolute truth when you are considering your projects. Fine. Project cost is not a cost that we are going to talk about here right now, because in project cost we consider everything, even amortization. Everything we consider in our C0. So project cost is C0 and we consider everything in project cost. Absolutely not. Do not confuse that project cost with the cost we are talking about. Right now, we are talking about the smaller costs of here. There are two kinds of costs. One is out-of-pocket cost, which goes out of your pocket, and the other is some other issues which are needed to be understood before we proceed with the subject. So please, I will absolutely make things clear, but remember, don't confuse yourself with the project cost and these costs. Now, imputed cost, basically, think of, I'm just thinking of the meal which my wife has prepared today. So that basically, if you consider the material for the it is 70 rupees. But what about labor? Did my wife charge anything? No. So basically speaking, this is an imputed cost. There is a cost. There is a cost of labor. There is a cost of labor, but it is not calculated. Why? Because my wife doesn't charge anything from that. Now, it might happen that my wife is working and could have given a lecture in this time, and may have earned 5,000 rupees. So then this 5,000 should have been added here as an opportunity cost. But remember, these are imputed costs because no amount goes out of my house for the meal that my wife prepares. So you can read what imputed costs are because throughout our sessions we'll be talking about if I'm given the opportunity, of course, to talk about these systems. Now, this is the cost accounting system we use. Now, the system is on the basis of absorption costing. Don't worry. I will make you to understand what absorption costing is all about, given my in my class. So you have your direct costs, which covers material, labor, expenses. These gives rise to the word prime cost. Now, this is going to be, please have a good look at this. This is because this is going to be helpful for cost sheet unit 5. I have two sums. Most probably I would not be able to cover up that because it's already 12:15. So this is also important for unit 5. So you have you get to cost, prime cost, and you have some overheads. So these are indirect. These are material, labor, and expenses. So these are indirect, and these can be divided into for related to your production, related to your marketing. Marketing will be either selling or distribution. You can call this administration and research and development. So these are production goes into production overhead. I'll not talk about under absorption or over absorption. So I will not talk about under absorption, under or over absorption today. Of course, I'm going to talk about. So this is a very important, maybe the most important concept in costing. I'm not going to talk about this today. I'm going to give you much time later. So you have your production overhead as absorbed basis. You take total cost, you make adjustment for stock adjustments, and you get cost of sales. You define that with sales, you get your profit. So it's a beautiful chart. It's a picture taken from some book, I don't remember, or the internet maybe, but it's a beautiful thing, covers up the whole issue of how you add up your cost. Don't worry, it's all there again. So what is a cost object? As I said, it is a product or a service or a hotel guest or a sales territory where costs are spent or users get informations regarding cost from that arena. So cost object is the first definition you got to know, and it is, I often use I have used the official SIMA terminology, how cost is defined, cost object is defined in the SIMA terminology. So and how cost object is defined in CAS para 4.7 in cost accounting standards. You can read this. So you can just read this. I'm just making you, giving you my perspectives. The cost centers are the collecting places. So, if you look at the shop, the tea shop, we have our example. So this is a tea shop, and this is where all the expenses, the costs are being. So this is a tea shop, and this is where all the costs are spent. So this is a collecting place. So this is a cost center. So why learn this? Now there can be departments, department 1, department 2. So each of them are cost centers as such. So cost centers are places. Cost object is a bigger place. Cost center is the places where the costs are incurred. And finally, it gets into the cost unit or the cup of tea. Ultimately, the cup of tea. So that cup of tea is the cost unit. Is a cost unit. So again, how cost center is defined in para 4.6 of CAS 1. It's given. What is cost unit? Unit of production in relation to which cost are ascertained. So unit of product. For example, you go and have a haircut. So service, unit of service. So this is the official terminology of cost unit. And what para 4.5 says is given. You can just read this. And now I come to composite cost unit. Get this very clear. Now, for example, two friends travel in a bus for 10 kilometers. This can happen. Or it can also happen that 10 friends travel in a bus for 2 kilometers. Now, both means the same. Please get this clear. Both means the same, because both gives us 20 passenger kilometer. 20 passenger kilometer. So basically speaking, when you have a unit, cost unit, where two issues impact, you have a composite cost unit. For example, one person uses a hospital bed for 5 days. So one person uses a hospital for 5 days. It means the same thing as 5 persons using the hospital bed. Excuse me, please. ক্লাস নিচ্ছি, পরে কথা বলছি 5 মিনিট। So 5 persons 1 person taking a hospital bed for 5 days, and 5 persons using the hospital bed for 1 day. It means the same thing. So basically, when you have two or more units taken together, then it's called a composite cost unit. For example, a car manufacturer, a particular brand of a car, cigarette manufacturer, a pack of cigarette or piece of cigarette. Here comes a composite cost unit. No, this is restaurant is also. So here comes a composite cost unit. This is also a composite cost unit. So you see, mainly service organizations comes with a composite cost unit. So cost unit and composite cost unit and cost centers, these are primary understanding you require. These are primary understanding. Cost of production. To produce, you want to produce something, so you just add them up. You want to produce something, you add them up, and you get your cost of production. Conversion cost. Now, what you convert? For example, somebody right now would say that he buys 2 products, LDF and HDF. These are the 2 products which very sorry. Something is. Sorry. So you have 2 products which you buy from somebody else. Now this is outside your business. This is your business. This is your business. So what you do, you take them and you convert them into bags. So this cost is your conversion cost. So conversion cost is all cost for converting the raw material into finished goods. Conversion costs are the cost of converting raw materials to the finished products. So cost of converting the raw material into finished products are conversion cost. Very important. Very important. Overheads. Overheads are not traceable to the product, not traceable traceable to the product. You cannot trace them to the product. You cannot trace them to the product. You have to do some calculations to get them to the products. So basically, these are indirect costs: indirect material, indirect labor, indirect expenses. These are overheads over the head of the product. It goes over the head of the product. This is, I think, in my humble opinion, this is the most critical subject in your whole cost accounting. This is the most critical issue in your whole cost accounting, and you need to understand this. So what we do is that, since overhead is unit 4 for us, so what we do is that what I do is that I cover overhead through overhead I get into marginal costing. So that is also what I'm going to do here. I'm going to go. I'm going to talk a little bit on material, maybe some days later when I'm giving another class. And from there, I'm going to go into overhead. And from overheads, I'm going to go into I'll tackle the problem. What is the problem of overheads? Accounting for overheads, and from there, I'm going to go into our marginal cost. Overheads are given in para 4.24 in cost accounting standards. These are production overhead, administrative overhead, distribution overhead, marketing overhead, selling overhead. Now, often marketing overhead actually conceptually in cost accounting standard terms, it's different. In cost accounting standard terms, it's different. But in books, you will find these two are covered up under marketing management. So you will find these two often covered up under marketing overheads. But for cost accounting standards, they are separately given. So the various paras I have mentioned for each of them. So you don't have to be so specific about the paras. Please don't be specific about the paras. Just consider this material which I have done for you as an additional material for reading. It is better, I think, in terms of the material which you have. At least my perspectives are here. But just ignore this. Just ignore this para, because this is from where I have taken them. So the various overheads, and finally you need to be very specific of this point of cost control and cost reduction. You have to be very specific about this issue of cost control and cost reduction. Now, basically speaking, cost control is a broader term. Why it's a broader term? Because in cost control, we really try to do something very permanent to us. Both we want to, as I said, if you reduce your costs, it is going to be beneficial for you, because if you reduce your costs, you can sell and get more profit. So you reduce your costs, and both are how to go about that. So what you do is in cost control is that you basically think of making some permanent changes to the production process. Maybe you take a different production process. Maybe that. Maybe you make some improvements in the labor techniques utilized. Maybe you take some measures which will help you go long. But cost control, you make easy changes. So you make changes which are pretty easy for you. And you target to change the per unit. So cost unit, for example, bargaining. If you go to the bazaar and bargain, so it will give you, it will guarantee you that prices changes. It will guarantee you the change in price, but that not be good for the whole concern, because you might have to reduce the quality of have to reduce with the quality of the product. So again, cost control is a preventive measure. It's a preventive measure, and it's a corrective measure. When you correct yourself, you have done something, and then you correct yourself. Your bargaining is not good enough, and you go to the shop the next day and you bargain again. You make a good bargain the next time. So that is how you go about the issue. Now, I have been saying again and again about cost accounting standards. About cost accounting, what are these? Now, these are our indigenous, our ICAI, the Institute of Chartered Accountants of India, Cost Accountants of India, where you are studying. They have come up with the rules, a 20-page document, rules, and these rules really make the day to day, because everybody is everything is guided in the Indian context with these rules. There are 24 cost accounting standards till date, and some of them has been revised. And one of the more important is cost accounting's classification. The more important I have mentioned in red. In red they have mentioned 6 and 7 is pretty important about material and employee cost. You don't call labor, you call employee cost these days. And administrative overhead, I have said, direct expenses, paper cup, somebody was talking about, and selling and distribution overhead 15. So these are the cost accounting standards. 15, 19 you have as a separate unit, you have quality control, you have in unit 5. So basically you don't have to study this separately, but you just have an idea about what cost accounting standards are, and maybe some, because I saw once a question came on what is there in cost accounting standard 10, direct expenses. So I'll show you the question paper just after the classes. So this is about the introductory part, and now we come to cost classification. Now, you want to say anything as regards to, because you should go unless there is a reason why you shouldn't go. Yes, I couldn't get what Nirupama has said. Please feel free to, and if you are there, please feel free to tell me what you want, what you mentioned, what you wanted to say about this. We shouldn't go unless for the reason why we shouldn't go. I understood. Nirupama, are you there? Okay, fine. Okay, I understood your point. I understood. You are talking about the cinema, na? You are talking about the cinema, going to the cinema. That is what you are talking about most probably. Yes. Okay. Now I'll tell you what happened. Look, I have a ticket, 200 rupees, and now I'm deciding should I go to the cinema or not. If you go to the cinema, you have to spend 20 rupees for going to the cinema. And you are going to go buy popcorn, which will give you another 60 rupees. So you have to incur 80 rupees if you go to the cinema. And in the meantime, after you have bought your film ticket for 200 rupees, somebody has come, your friend has said, oh my God, that rubbish film, you shouldn't go there. It's an absolute waste of time. You have heard the story and you absolutely don't like the story. For example, it happens. I absolutely don't like going to a horror film. I bought the ticket and somebody has said, oh, you bought the ticket? Are you going to a horror film? No, I don't want to go. Now the decision is, what is the benefit I'm going to get if I go there? The benefit is seeing the movie. So if you quantify that benefit, it may be 50 rupees. 50 rupees benefit you are going to get if you go to the cinema. And the expenses you are going to make? You are going to make an expense of 60 rupees. So you shouldn't take that decision. That is what I said. The cinema ticket, which is already incurred, is a sunk cost. Don't worry. I'm going to take examples if I'm given the opportunity, and I'll make it absolutely clear to you. But my point is very simple, that costs which are already incurred, if you are thinking about your economic cost, I'm not talking about cost accumulation process. Methods of costing, forget about that. Yes, of course, that is a cost. You have spent it. That's out of your pocket. It's gone out of your pocket. So it is, you have spent the money. Surely. So it is a cost, undoubtedly. But it is not a cost for your decision-making purpose. Not a cost for decision-making purpose. This is what I want to say. This is what I want to say. It is not a cost for decision-making purpose. This is what I want to say. I think I have made myself clear. Any questions you want to ask me? Any questions you want to ask me? Before I move for 10 minutes, maybe I'll be talking on the classification of cost. And after that, I'm going to just show you the questions which had come in 2019. And I'll sign off after that. So any question till now you want me to clarify, you can unmute yourself, you can message me. I'm checking. Any questions you want to ask me? Okay, I'm good. Thank you, Sharat. Thank you very much. Okay. Please take your time and put questions. Maybe I'll be talking for 5-10 minutes. Forget about CAS 1. Forget about it. Or rather, we want to classify our costs. And we have, this is a very important diagram, I feel. I will say this is behavior wise. I will say this is behavior. This is behavior wise classification. Just give me a few minutes because some noise. Can you hear me well? Can you hear me well? Because some noise are good. Okay. So this is where we were classifying cost according to nature of the cost or expenses, by function, according to behavior, according to the traceability. We can trace the cost or not. And of course, we have decision-making cost, which will come not now, only when we talk about marginal costing in this syllabus, we will be talking about that. So it is either a subjective classification or an objective classification. It is either a subjective classification or an objective classification. So here we have first, we have according to behavior, how costs behave. Behavioral classification, how costs behave. How costs behave. Of course, there is a cost in the CIMA terminology. Forget about that. Level of activity is a very important aspect. You know, if I have a machine which can produce 1,000 cups, then that is the volume of production it's a range. You can call this a range. I have a 1.5 ton AC. It can cover an area up to 100 square foot or 200 square feet. So this is a range. So level of activity is a range. Of course, if it was a paper 8 class, I would have gone details on this. Forget about this. Or it can also be a number of units sold. For example, if my sales is the maximum given, I cannot sell beyond 1,000 units. So that is also a level of activity. You either have a fixed cost or a variable cost or a semi-variable cost. I have given the similar terminology. You can read the similar terminology. This is the diagram you have. This is the total fixed cost. For example, I manufacture fountain pens. I manufacture fountain pens. And for my purpose, I have spent 35,000 on an air-conditioned machine. So I've spent 35,000 on an air-conditioned machine because I'm going to I'm going to sit there and produce. So look, that remains the same. If I produce 2 products, 2 fountain pens, it is same. If I produce 5 fountain pens, it is same. If I produce 100 fountain pens, it is same. But it is, you have to be within the range. Within the range, you have to be within the range. If you are not within the range, then your fixed cost might change. So remember that fixed cost remains fixed for a particular period. For a particular period, and that is why for a particular period, and that is why it is often called a period cost. It is often called a period cost. Variable costs vary. Variable costs vary with the level of activity. For example, fountain pens, the direct material. If I produce 1, if you produce 0, I don't need to spend any amount on direct material. If I produce 1, I want to produce this much. If I produce 2, this much, 3, this much, 4, this much, 5, this much, and so on and so forth. It's a straight. So this is how you have to consider that the variable cost per unit is fixed. This is a standard assumption in our cost accounting. It's not a standard assumption in our economics. In economics, it will change. And of course, you have a semi-variable cost. This is a semi-variable cost. This is a semi-variable cost where you find that you have a fixed component as well as a variable component. Example, think about your electric bill. Think about your electric bill. Think about your electric bill. There is a meter rent which is constant. There is a meter rent which is constant. For example, 200 rupees. It's a meter rent which is constant. If you do not consume, if there is nobody in the house, there is no consumption, then also you have to spend 200 rupees. So that is the fixed element, fixed portion you have to spend. And as you produce more, you have to go on spending. So, for example, after this, if 1 unit is consumed, you pay 9 rupees. So basically speaking, it is a semi-variable cost. So accordingly, if you look, if you consume 100 units, what would be your cost? Your cost would be meter rent would remain at 200 rupees plus 100 into 9, 900. So that would be 1100. If you are consuming 200 units, meter rent would be 200, and units consumption would be 9 into 200, 1800. So this would be 2,800, 2,000 rupees. So this is the way your semi-variable cost behaves. So you have fixed cost, you have variable cost, and you have semi-variable cost. And how your cost per unit behave? The fixed cost is a rectangular hyperbola. Why? Because the cost diminishes with the number of units. How? If I produce more, it would be absorbed over a number of units. It would be absorbed over a number of units. For example, I do private tuitions, and though actually I don't do. So I do private tuitions for hypothetically, and the air condition which I have installed at 34,000. If I have 1 student, then I will charge that 34,000 on that student. On the other hand, if I have 34,000 students, then I will charge that amount of money on 34,000 students, and therefore the air condition cost on the number of students is actually very sorry. On the number of students is ₹1. That is why you find your average fixed cost as so this is average fixed cost. This is average fixed cost. So you have your average variable cost. It is per unit is fixed, as I have told you, it is fixed, and you have your average. So the total cost curve would be a summation of this, and it would be like this. So it is 1248, and I would end here by saying that on the basis of how fixed cost is treated, how fixed cost is treated, you determine on your absorption costing and marginal costing, the two most important. So in your syllabus, throughout you talk about absorption costing without mentioning it is absorption costing, but in a particular unit you mention marginal costing and you talk about it. So here I end today, where I will be starting, if I'm given an opportunity, where I will be starting, I will be starting with segregation. I'll be starting with segregation of semi-variable. How you, because you need to do this first, so this is a unit, a separate unit is given for this 11 most probably, semi-variable overall. So this is where I start next day if I'm given a chance to. Thank you very much for being with me, and I will just I'll just give a minute. I will just give me a minute. I will actually make a PDF copy of this with my okay. So I come back, and there are a lot of participants. Okay, sorry. So let me show you. Let me show you the questions that came. So these are the questions which. No. Sorry. Just. I don't know why it is not wrong. Just give me a few minutes. Okay. So this is how I go about. So I will also share this with you. This is so I find 1, 3, 5. Actually, I couldn't finish. I was talking about the cost accounting standard 10 deals with direct expenses. Got 1 marks. So which of the following should be a suitable cost unit for a hospital? Any question? Any answer for a hospital?
Patient per day.
Absolutely, 1 marks. Okay. So there's a segregation which I was to do, couldn't finish this day. So this question also could be done. I will share, try out and ask me if you have any problems. So this is from 2019. Or I can do one thing. If you, I can also put in 2020 ka questions, then I can present. I think that would be good for you as well. So please join the classroom. Thereby we can share, we can give the MCQs for some time, and you can assess yourself as regards to your questions. Any questions? Because I propose to finish up. Any question? Anybody? Any kind of questions? I also have a exercise book in my hand, so I can also write down your points you need to you need me to clarify in my next class. I can also write down any point you need me to clarify. I have a. So please feel free to let me know how I can help you as regards to anything regarding your academics, regarding the course.
Sir, how to calculate labor charges for different activities?
How to calculate labor charges
How to calculate the conversion cost, sir,
for
for a product?
I'm coming. Different activity. Conversion cost. Now look, basically labor is a labor or employee cost, which you call cost accounting standard 7. There are some methods. I'll spend half hour on this. I will specifically spend half hour on this. This is unit 3. Yes, Hima?
Okay.
Okay.
Okay, sir.
Okay. If I'm to continue the classroom, I will surely come up with labor cost. Maybe half an hour I will be talking on the labor charges. Now, one thing is very important. Actually, your queries are coming from your workplace. So maybe you learn the issues in the subject, and you can apply that. That can happen. Now, regarding the conversion costs are basically material and overheads. Labor and overhead. So when I'm going to talk on labor, it will cover conversion costs, and when you're going to talk on overhead, you're going to cover overheads. So how you charge the costs on a product, that is most probably what you are saying. Material, it is easy. For example, the fountain pen with which I'm writing, you can see the plastic, you can see the nib, you can see the inks. So it is easy to stress the cost into the product. But the overheads, for example, the AC in which the person is acting, so how to charge that AC charges into this product? So for that, my dear friend, you have to be with me for some more days. I will absolutely clarify. This is a wonderful area. That is what I said about your overheads. Unless until you get that point, that is, some cost you directly do. For example, right throughout the day we have been talking about the cup of tea. Everybody knows the sugar and the milk and the tea leaf that can be accounted into that 4.25 rupees. You can know, but what about the fan, the electricity charges which is spent for the month in the small shop? That has to be put into the product price, product cost, and that is where our overheads matter, and that is that might be my most interesting contribution as regards to the subject. So I have with me some ideas how to convert that. That will be surely coming. I think what you're talking about is how to charge, how to absorb overheads, into the cost structure. Don't worry, I'm there for you. If I continue with the class, I will surely come up with it. Any further questions?
No, sir.
Okay, fine. So it's 12:56. If you do not have questions, I will round up. But please click this and get into the classroom. Through the classroom, I will share my materials immediately. So thank you very much. Meet you. Thank you very much. Meet you the next day if I'm given a chance to.
Thank you, sir.
Thank you.